Well, on that point specifically on the liquidity injections, that should be viewed in the context of the fact that they really under-injected in Q3, Q4 last year. So we're seeing a lot of money leaving the economy, and that was not being fully offset. So I think they're having to be more aggressive here in January because of that. Then on top of that, we've got, of course, the Chinese New Year. They often inject a lot of money ahead of Chinese New Year and they pull it back out. So I think the question right now is how permanent these injections are. Do we get back from Chinese New Year and they're pulling a lot of money out?
When you say that, when you say they under-injected in Q3, Q4, was that with the benefit of hindsight or was that deliberate?
It's benefit of hindsight just because the data takes so long to come out. But it was really related to the fact that we were hemorrhaging funds out of the system. So that's the new difference today that we didn't have before, where we're actually losing money, and that has to be offset, and then we need a net injection on top of that.
Would you call this crisis management? Would that be too strong a term for what is going on in China, or would it be understating the case in China?
I'd say in between, probably a bit more on the crisis management side, because it really is tied to capital outflows, and that's certainly not a positive thing.
But they had their priorities wrong because they started the year with this exciting project called circuit breakers, you know, for the stock market. And it turns out it's really the flow, it's the violent outflows of capital which have turned out to be the real problem. Because here they are, they were so proud, you know, becoming a new IMF SDR member. They actually made a big deal out of something that was more textbook than anything else. And now they've got an outflow problem and they're talking capital controls. I heard this morning from at least one trading desk that some banks are actually closing off mortgage facilities to North American Chinese nationals buying property in North America. So it's not just a Chinese issue, but capital controls / China seems to be the theme of the month right now.
Absolutely. I mean, I think a lot of the weakness we're seeing in the markets globally ultimately have to do with the slowing growth in China and the concern over capital outflows and whether or not we're going to get another currency move. I know in Davos there was a big message coming out of there that we just need better communication from the Chinese on things.
That's it? Communication?
That was one of the big messages that was sent. But I think beyond just communication, we need more focus on this debt problem in China, because that really is what is at the root of everything. The market is nervous because we've got a debt problem that the authorities aren't addressing, and most of the market thinks the best way out of this is a large currency move. So when they see the currency moving 1 or 2%, they're asking themselves, when do we get to 25? And I think we're going to continue to have this dynamic until the government starts to do something about the broader debt issue.
Yeah. Let's home in on that a little bit right now, because I don't think I'd be totally out of line to say that China has gone to great lengths over the years to sort of gloss over and paper over a debt problem. You know, for years we heard about NPLs at or around 1%, nothing to bother about. If at a worst case scenario, 1.5, 2, or something like that. We know that's not true anymore. We know these are mounting. How bad, in your estimation, is the debt problem? I mean, where do we start? Where are we now? Where is it going, as far as you're concerned?
In our view, this is the biggest debt boom the world has ever seen in such a short amount of time. So size of banking sector assets has gone from $9 trillion in 2008 to $30 trillion
From 9 to 30?
To 30 at the end of 2015.
Holy cow.
Most of that has gone to the corporate sector, so this is not a household debt issue in the way that we had in 2008 with the U.S. If you look at the return on credit, which is the way we try to estimate losses in the system, because there's so much credit outside of the loan portfolio, it looks to us like we could have a non-performing asset ratio of around 22%. If you assume
22%?
22% just based on the return on credit. Now, I know it sounds high, but we have seen those ratios in other instances around the world.
What's the official rate right now? What's the official NPL right now?
I think it's around 1.5.
To 22?
Yeah.
Okay.
If you add in special mention loans, you're closer to 5. But again, this is just the loan portfolio, and it's very important that people look at the entire credit picture.
Yeah. This is big. When is the world going to wait? Is this what's being priced into the market right now? Are people assuming this kind of a scenario, or do they not know what's going to hit them?
I think they're starting to price this in, yes. And that's why I was saying I think we're going to continue to have volatility until the Chinese government starts to recognize that this is the root problem behind the lack of confidence.
Right. What's their fix going to be? What's their fix going to be? They've had years to think about it. What do they do? They have a viable
it's not the
solution?
first time they've had this problem. So they had a big bailout of the banking sector in the late 90s. That did work quite well. So I think there'll be some variation of that playbook with capital injections into the banks and carve-outs of bad assets. But what's very different today is that we've got tens of thousands of non-bank financial institutions. That is going to be incredibly difficult to contend with. It's not going to be as clean as it used to be in the past. And we've got a lot of mobile funding within the banking sector, so we have more liquidity risk today than we used to in the past.